and welcome. It's Rob from Property Investments UK, and in today's video we're going to be looking at, is buy-to-let dead in 2017 and beyond? Now this is a very important video because there's lots of kind of polarizing and divided opinion currently on whether buy-to-let as an investment and as a property strategy is viable going forward from 2017 and beyond. Now the reason why a lot of people are kind of discussing that is because there's lots of different kind of changes that have happened in the buy-to-let market recently. Certainly in 2016 there were a number of different changes from a legislation point of view, and finance has changed as well, and lots of different kind of opinions and ideas as to whether property, or buy-to-let specifically, is going to be worthwhile, profitable, viable as an opportunity and as a strategy going forward. And there's some tax changes as well that's kind of come into this marketplace that's kind of putting some people off or making some people unsure. Now, to give you a bit of an idea of what the video is going to be about, my viewpoint on buy-to-let is that it's very much alive. It's so many opportunities in the buy-to-let market that we can kind of see now moving forward. And I just want to kind of give you some context and some ideas as to why I think that is. And hopefully it will kind of help you when it comes to, or if you're looking to maybe consider buy-to-let or consider staying in buy-to-let as an investment. So I think the three main things to consider is going to be legislation that's coming, tax changes that's coming in, and finance kind of changes. But the reason why I think ultimately buy-to-let is still certainly alive and kicking is because from an end user viewpoint, so tenants, people wanting to live in property and rent property, that is still very much a market that's not going anywhere. There's a massive increase in demand in people wanting to rent their own houses. Now that's not just because there's a severe supply or lack of supply of properties, there certainly is, but also from a personal viewpoint, from individuals' kind of requirements. The economy is changing, people's kind of demands and requirements are changing. So sharing economy in loads of different industries is kind of disrupting that market, and people are much more flexible, people are much more, in terms of location-wise, diverse. They don't necessarily want to just buy in one area and live there for the next 30, 40 years, like maybe a previous generation may have done, or typically their work was set up for them to do that. So because of that quite transient population and quite kind of transient nature of what people are doing work-wise and where they want to live and what they want to spend their money on, it does change the dynamics of what people are going to be doing from a homeowner point of view and a rental point of view. And all of the figures, all of the stats that we look at from rental is there's so much rental demand that I can't see buy-to-let being an industry or market that really ever disappears. Like, even if there's changes in legislation, and there will be all the time, there will be changes that kind of come into this marketplace, as there is with any industry, but that's okay. It's just a case of kind of switching and changing how it is you then therefore kind of react, what properties you consider, what areas you consider, what figures you would even consider buying and renting properties for. But certainly as a concept, as an idea, and as a strategy, I don't think buy-to-let is going to be suffering or going to be certainly dead anytime soon, but there will be big changes, and that's primarily because of these kind of three aspects. So let's consider the first one, which is legislation. Now legislation has been changing quite slowly over the last kind of couple of years, but recently it's ramped up in certain areas. So for example, in Wales, they brought in some widespread licensing requirements based on rental properties as a whole. Some other councils in England have brought in licensing based on a certain type of property, so if it's maybe a HMO, or certain areas if they feel like there's lots of rental in that area and they need to improve the standard or the quality of homes. Now licensing may or may not be the right way to kind of go about it. There's different kind of viewpoints on that, but what licensing does do is, if it's done correctly by a local council, is it does force landlords and property owners to improve the quality of their property over a period of time. Now that might be because in anticipation of a council officer coming around to do an inspection, so they think, right, we need to get certain things done and maybe do some maintenance works on the property they hadn't considered beforehand. Now this doesn't impact or affect every single landlord. There's a big portion of landlords out there that have very high quality housing stock, but there is a section of the industry that doesn't have a high quality housing stock, and that's who it's really identify or trying to identify to improve housing standards. So I don't see a bad thing in terms of some of that legislation. It means it's maybe more restrictive sometimes in terms of what properties, work great as buy-to-let. So some older buildings, it would be fantastic housing, but they need so much work doing to it to make it more, let's say, energy efficient. Then there's probably now going to be other ways in which those buildings might be utilised, or other ways in which they're developed or refurbished or kind of really converted into usable accommodation. And that's not a bad thing. There's lots of technology improvements that are coming into the residential kind of house and property in general, housing market, that make it really efficient and really cost effective to make improvements on properties, both for the investor and the owner of the property and also the end kind of tenant. So I don't see legislation as a major issue, but it certainly does cause more paperwork. It certainly does cause more kind of proactive nature in terms of making sure your properties are up to standard. The easiest way to kind of counteract that, I'd say, is just work with very high quality letting agents in your local area. They will have the experience and the structure and the skill set to make sure those properties are managed effectively and ticks all the boxes for licensing as well. So I wouldn't get too worried about licensing and see that as something that's going to maybe disrupt the market. I think it's possibly in some areas a good thing. In other areas it's maybe not really needed, and certainly the councils aren't really doing it correctly, I don't believe, in terms of how they're either delivering it or the resources they have in place to physically go out and view those properties. They just don't simply have the kind of staff members or the resources to do it. So it's almost a pointless exercise and more just trying to get charges and income coming in from kind of licensing. That's kind of a separate factor. But licensing in general, I think, can kind of add some stability to the housing market and certainly improve some housing stock in some areas. So I don't think that's going to be an issue when it comes to kind of buy-to-let going forward. The second thing to consider is taxation changes. So in 2016, there was a couple of changes that got brought in. One for stamp duty, which is effectively makes any second home or investment purchase, you pay a premium on what stamp duty you would ordinarily pay to buy that property. The second is with a change in mortgage interest relief, which, long story short, ultimately impacts usually higher rate taxpayers who are highly leveraged and have high mortgage amounts on property deals. That's a very generalization in terms of those two kind of tax changes that have come in. I'll put some links below this video to some further reading and some further information on that. But my viewpoint on it as a particular kind of concept, if it were, is I don't see either of those kind of really drastically impacting buy-to-let so that it doesn't become a strategy that's viable in the future. So on the first one, in terms of stamp duty increases, that's going to affect the majority of residential property purchases where people are looking to do maybe buy-to-let or even HMOs or some other kind of rental strategies. So from an investor's viewpoint, you're competing like for like with other investors in the market. So all that does is change the dynamics of what you're physically going to pay for a property. Now that I don't think is necessarily a bad thing. It just changes what offer you're going to be putting forward. For savvy investors, it'll make them more conscious over what price they're purchasing and just ultimately look at the end figures. So when they include the purchase price, the buying costs, any other fees that are involved in purchasing the property, and then they look at the rental income, does that kind of property make sense? Now in some areas of the country, it will certainly have an impact. So in very high value locations where the rental yields are low and the stamp duty and the purchase price maybe already is high, or maybe those locations aren't going to work going forward. But ultimately, they probably weren't the best locations to do buy-to-let from a physically or from a kind of financial viewpoint in terms of how much rental income's coming in the yields anyway. There's loads of other opportunities out there in the UK, and some investors were primarily buying houses and just kind of banking on it and hoping that there's going to be some elements of kind of growth, which is, from a buy-to-let strategy, is probably looking at the wrong kind of aspects. I'd consider the fundamentals really, the cash flow, the rental income those properties are going to bring. And if you look at the whole of the market, when you're looking at buying properties in areas with solid rental yields, as I said, I don't think it's going to impact too much because you'll just factor that into your deal and you're only then comparing or competing with other investors in that particular kind of sphere of properties that are going to be working anyway. So I don't see that as a main sticking point. Next up is the mortgage kind of changes in terms of interest rate relief that's kind of coming in. And yes, this will impact existing landlords and a pocket of existing landlords. It's not going to be kind of a widespread amount of landlords that are going to get wrapped up in this. Some landlords own properties cash outright. Some landlords have very low loan to value mortgage. The problem with this though, as a kind of a principle or as an idea that's coming in, is that it's almost like the 80-20 rule, the Pareto principle, where effectively you have a small section of landlords which maybe own quite a large percentage of housing stock. So when this change comes in, it's going to be tapered over a period of years. You will see an impact in the housing market. There will be a number of tenants that get their rents increased or get notice on a property because the landlord physically can't make that property work anymore, and they then have to sell that property on. So in a short period of time, maybe 3-4 years, there is going to be some disruption in the housing market that this specifically, I think, is going to impact unless there's any changes that happen in the background and change the dynamics of how this comes in. As I said, I put some links below this article for further reading on it, but effectively what it does do is it impacts mainly people that have very high leverage on mortgages, to the extent where some properties that were maybe earning some rental income profit previously may no longer be underwater, in as much as the landlord has to physically pay into that property in order to make it work. So there's not enough rent physically coming in to cover the mortgage, maintenance, letting agents, all the other fees of running a property, so it no longer works. So the landlord has to then give notice to the tenants and sell that property, unfortunately. Now, I think this is a short-term impact. If you're buying property currently, there's other ways around that. So setting up a limited company and buying it in a company currently is potentially one option. And there's other ways that you can kind of mitigate that impact if it were not having so high a mortgage or leverage on a property. Now, I think long-term, that's not necessarily a bad thing. Like it's a situation where from a, let's say, a wider viewpoint and looking from it as if you're maybe outside of the investor kind of buy-to-let industry, you probably do want that market to be stable. And personally, I do from an investor's viewpoint. I much prefer to invest in a stable market rather than a market that has kind of quite erratic house price increases or drops. And with that in mind, there is some need for kind of legislation or change to the market to try and kind of temper some house price growth. But London is a very different market than the Northeast or the Northwest or the Midlands, and it's very hard sometimes when legislation or tax changes are brought in which ultimately impact the whole of the UK or the whole of kind of certain markets, rather than just trying to say, well, geographically, let's try and make these changes in that area. And I understand that's quite hard to do from a national viewpoint, but separate to that, what that tends to then happen is it has ripple effects across the kind of the whole of market. So there are going to be pockets of landlords that do have large percentages of housing stock that are going to be highly impacted over the next couple of years. But if you look further forward than that and think, okay, well, 5-10 year timeframes, what's the market going to be like then? I think it'll be much more stable. All of the changes that are kind of coming in take time to implement, take time to take effect. But if you think the next generation, or you think in the next kind of decade or so, how those impacts or how those changes are going to impact and fundamentally change the housing market, yes, it will make it kind of harder for some landlords, but ultimately I think the long-term situation is going to be a much more stable kind of structure. And it's hard to see that currently. I completely get that. And there'll be people out there watching this video that will be like, no, Rob, you're completely wrong. It's going to be a kind of a disaster for the housing market, a disaster for tenants. And I know there's going to be a percentage of the population and tenants and investors that are going to be affected, and that it will really impact their portfolio. But I'm just trying to look at it from the bigger kind of picture viewpoint in terms of, in a number of years' time, how I think that's then going to make the housing market look. And going back to the beginning of the video, I don't see buy-to-let being dead. There's just too much demand and need for housing that is more flexible than straight outright home ownership. We've looked at legislation, we've looked at kind of taxation, how that's going to impact buy-to-let in 2017 and onward, but there's also changes in terms of financial impacts coming in as well. Now, I'm not a mortgage broker, and I'd always recommend speaking to your local or your preferred mortgage broker to try and get an idea as to what's going to be best suited for you. But specifically what we're seeing when we're having conversations with our brokers on what changes are coming in. The buy-to-let industry is changing in terms of the different strategies that are available. So there are more and different mortgage products coming in for other opportunities, which is great. It just gives more options and flexibility when it comes to kind of considering property investing. But what is coming in as well is there is restrictions and limitations in terms of what banks are allowed to lend to individual investors. So they're increasing the requirements in terms of maybe the rental coverage or maybe lowering loan to values. Effectively, again, from my viewpoint, trying to make it a slightly more stable market. So you don't get the same situation back in 2007, 2008, where people were very highly leveraged, took out quite risky loans, quite risky mortgages in order to buy property because they thought it was an asset going forward that will continuously grow, whatever kind of happens in the market. But we know that there's peaks and troughs in property, like there is with many other kind of assets and commodities and investments kind of out there in businesses. It does change over a period of time. But what this hopefully does, it brings a bit more stability to the market so that you don't get those kind of same wild swings. And I don't see, again, that as a bad thing. Yes, it will limit some potential finance that's available. Yes, it will mean that some investors have to put slightly more into some property deals in order to make them work. But in terms of the bigger picture, what that should hopefully do is stop the situation where people have very high leverage and very risky loans on property deals. So there certainly are changes coming in 2017 and beyond. There's changes that have happened recently that do and are impacting the buy-to-let market. But as a strategy, as an industry, I think there's loads of opportunities in buy-to-let currently going forward. Even straightforward vanilla buy-to-let, they're properties that we still consider in our portfolio now if the location is right and the rental yield is right as well. And we get loads of inquiries from investors who just want mainstream vanilla buy-to-let. They don't want to maybe consider some other type of strategies, primarily because it's what they know, but also because it gives them security of an asset base and an investment that they have a lot of confidence in going forward as well. So I don't see buy-to-let disappearing anytime soon. Although the changes are kind of coming in, there's loads of ways that you can change your portfolio, tweak your portfolio, adapt and survive, but also thrive going forward. So hopefully that video helps, gives you some kind of context to some of the changes kind of coming in and my viewpoint in terms of buy-to-let in 2017 and onwards. Any questions, don't hesitate to ask. Always happy to help and look forward to catching up with you in the next video. All the best, take care, bye.
Thank you for watching this video. If you like this content and you'd like to join our free online property training course, we've got a link for it on this page. And in there we cover a range of different property strategies to help you get started, either building a long-term property portfolio or creating a cash flowing property business. We also look at ways to increase your return on investment with any of the properties you're maybe considering. And we also have a couple of cheat sheets and downloadable documents in there as well. Simply click on the link to join the free training course today.